It's a tug of war, battling to keep my sanity. Say no more, say no more. I love you, but
what's going on, guys? Get started in 1 minute.
I wonder
How's the sound? Give me a quick sound check. Yeah, see what the chat is. Apologies for the wait. Where is the? Hold on one sec. Sorry. Looking for my. There we go. Gotta turn that down. All right, we should be good to go. Sound is good. What screen am I using again? Let's see. There we go. What's up, guys? Good morning. It's just after 10. Gonna go live. Hopefully take some trades. If we don't take trades, we take questions. And yeah, I'll give everyone a minute. As you said, it appears to be that the sound is working well. Haven't had any issues in a long time with that, so that's good. So we had CPI this morning. CPI came in a little bit cooler, which is good. This looks like it's possibly a short setting up in the NQ. Anyway, let me make some adjustments because I have this all changed around. So to give you guys, so one, I didn't really. So one, good morning. Thank you for tuning in. As a reminder, none of this is financial advice, strictly for entertainment purposes only. Shout out to the sponsors of the stream, Bybit. So the link is below, and that gets you upwards of a $30,000 sign-up bonus. As I said in the stream yesterday, the team at Bybit is going to be issuing me new promotional features and new goodies for you guys. People ask this all the time. Bybit is only available to you if you are not in the United States. So if you're able to KYC, you're able to take advantage of it. If you are someone who is still looking for a non-KYC alternative, there's other exchanges. The Phemex link is still below. Also, in the last couple streams, I mentioned that Phemex is going to be listing a token. That's something that I'm going to be looking forward to. I'm going to be buying it. I'm just going to let you know. As I said, I'm probably not going to be buying it right off the open. I want to see how it trades. But my thesis is that exchange tokens tend to do really well. And I think that we're positioned at a good point in the cycle. I think the worst performing exchange token did like a 3x. The path after that is unclear, but I think that, considering performance of some really good exchange tokens, for me, it makes sense to pick some up. Anyway, so we have a different arrangement going on right now. I have Sierra chart. So you're looking at Sierra chart in your top left. So we have the DOM. We have the standard 3-minute set right now, but we'll probably change that over to 2500 tick. We have TPO. We have the footprint. And then below we have EXO. So I forgot that EXO allows you to open up TradingView right from it. So that's really convenient. So we'll go ahead and keep this the way it is. And then what you're looking at right here, this green portion of the screen, this is sandwich trading. So this is the trading terminal that I use. I think that is the #1 trading terminal in terms of execution, order management, portfolio management, connection to all exchanges, and the fact that it is self-hosted. So from a security standpoint, I think it is second to none. In Silico Terminal is a great terminal as well, right? I was looking for a perfect terminal for a long time, and I know that's a really high standard set. The guys at Sandwich are just shipping out amazing features on a week-by-week basis. So there's a lot of stuff you guys can look forward to. But that's what you're looking at up here. That allows me to use a TWAP, a scale order type, an iceberg, swarm, market, limit, standard, what have you. And then last but not least, the upper right-hand portion of your screen, that is my center point. I think I said center point Dash Trader Pro. So the portion of the screen that you're looking at is just going to include a little bit of a watch list, the daily chart, depending on what I'm clicking on, level 2, and then the tape. All right, cool, good stuff. So how are we feeling today? I didn't trade CPI this week. It is my daughter's christening, so we have that ceremony, and because of that, we have a bunch of tents being set up in the backyard. So I wasn't able to really focus on CPI this morning. Ended up taking one trade, so I'm up like 6 3/4 points for the day. So what are we thinking? Bullish, bearish? We'll take a look at so right off the bat, just to give you an idea of where we're sitting right now. Looks like the NQ and the ES breaking outside of a multi-week range, so that's good. I think the level that you want to see hold with the NQ is going to be that range high. So we're looking at ultimately right around, let's see, kind of right around where we're trading right now. One sec, let me just line that up. I'm noticing platform is moving a little slowly right now, which is not good. Never does that. Maybe you have to just, let me minimize this and we'll just go with a standard bar chart. Sometimes if you use like the studies on Sierra, if you have a bunch of studies, and you know, it's not a problem if you're not live streaming, but if you have a bunch of studies, then it could slow things down, and that's never a good thing, obviously, if you're trading a product that moves like this. So anyway, we're not actually there yet. My mistake. That high is probably right around that 75 handle where you see that significant offer. So 469, 471, a couple points below. I would honestly, considering this is, again, great number off CPI. I got a bunch of Fed speakers today. It's clear that inflation is trending down. This is a really sharp move into, again, a very significant level. This is the kind of setup that you could easily see form a substantial trap. So you get a break through that 75 level. We have a lot of commitment up here so far. Price is building value though below. So if we look at just today's TPO, I think the problem is when you expand the TPO that much. So if I had the chart setting to like a limited amount of days loaded, it wouldn't be an issue. So if any of you use Sierra and you ever run into an issue, make sure that you're not loading 1,000 days onto the platform at once. I think it just uses a lot of memory. So we had an imbalance move from CPI. So that leaves us with an air pocket down here. So we'll mark that off. That 75 handle, which is we've done away with now, is the prior range high. So you just want to see ultimately that level is sold into and that we end up remaining bid there. So 75. So we'll just, for the sake of the stream, keeping an eye on the level. I'm not going to chase anything during the stream because, as I said, I think I have a tendency to trade a little bit more than I normally would. I would say a lot more than I normally would when we're on a stream, because it feels like there's sort of a need to produce and a need to put out live trading content, when normally when I'm not streaming, I will have my levels in mind, and I'll usually give price more time to develop. And the trouble is, if you're looking at a tick-based chart or a volume-based chart, meaning it's a volume-based periodicity. So for example, it's a 2,500 trade periodicity. Each one of these bars, so they would normally be candles, is printed by 2,500 contracts. So you'd have to imagine when, after the open, especially when there's a lot of volume that's coming into the market, you might have a lot of bars printed, but it might not actually mean much in terms of development, acceptance, absorption. It's easy to, let's say, or I shouldn't say you would have a lot of bars printed and be confused. It's easy to transition from, let's say, if you're looking at a 5-minute chart and you're thinking, okay, if I see 6 5-minute bars above a level, I know that's a half-hour move through. It's a 30-minute candle through. If you're looking at, if you transition to if you're trying to, as I've said before, you can sort of transition from a time-based chart to a similar non-time-based chart. You know, you might have a 2500 chart that looks like a 3-minute chart, but it's going to change when there's a lot more activity. So you might be able to replicate what looks like a 3-minute chart on a non-time-based chart, but then you have to remember that when things pick up, you have to account for that. So it's not just any longer looking for the same amount of bars to print through a level, or, you know, a half-hour close through, you know, 6 5-minute bars, as I said. You have to remember that the non-time-based periodicities, it's gonna change the amount of actual candles that you see printed. Not to confuse anybody, this is probably not necessary to go into ad nauseum, but so there's that 475 level holding. So a good amount of selling coming in is what we want to see through the level, because the danger is that you trap a good amount of long behavior up here, or redundant good amount of. You trap longs up here, so that level's selling now. 75, selling above and holding, but the danger is with this kind of gap. Let me take out my drawing tool. So I'm not looking at any trades right now. So for those of you that are wondering why I'm not taking anything, you have possibly a setup that forms after we fail to accept through the range high, so some kind of loss of momentum in this region. Trap building, loss of momentum, absorption, all signs we might look for up here. Otherwise, it makes sense for us to tap some of these thinner regions. So you have a thin spot right here, single prints, and then all the way back here at the origin of the move, which is untested. So, I mean, in reality, it's probably better off to use more of the drawing tools here. So we'll just map this out. Now you have an idea of the levels that I'm looking toward. So now retesting that 75 level. So it looks like, so for example, this is a good example. I'll zoom out a little bit more so you can see a little bit more granularity, or it's a little bit more granular rather. So move up, and although price is higher, you're beginning to see CVD diverge, right? So there's more selling up here. Price is able to maintain higher into the open, push up through that range high, but we're seeing, I mean, it's a lot. It's mostly selling coming in. It's holding, but the trouble is, if buyers don't start taking control up here, the trouble is if buyers lose momentum and we begin to roll back under that level and sellers just really hit the gas pedal. So 75 level retested, held, that's good. There's your retest. It's not like it was smashed exactly. You know, it's not like there was a ton of selling that came in there. It's a little bit offered down there still as well, so we never really zeroed out. So we'll see. I mean, moves like this off of CPI, so BTC fully retracing again, so pretty choppy morning. These days can kind of just exist in isolation. I don't think it's going to change the higher time frame trend unless there was a really ugly print. But I think that a majority of them, you're going to see that we end up filling out a profile like we have today. So what that ultimately means is we trade back into the lower portion of the structure and retest sort of this 15.4 level. I mean, but yeah, the NASDAQ is really strong right now. I mean, these charts right down here, just to give you an idea, Bitcoin, Ethereum, S&P, NASDAQ. We'll actually put coin up there. So coin down. These are just today's sessions, by the way. Put on a 5-minute chart, so it's... So honestly, I'm leaning towards this bringing buyers in above this high and spilling more than anything, honestly. I said honestly twice. So actually I'm gonna tag some on up here. So as long as we're below 15,500, I think I'm willing to short this. I mean, it's not the greatest amount of momentum right now. Sellers are starting to hit the bid. It's a CPI day move. I mean, normally you get the turn 30 minutes out. SPX, pretty big gap. So if we look at the S&P, and we have a substantial gap below us. So I have 2 contracts on right now. Probably look to add some more up to that level. Again, trading with much less size than normal just for the sake of the stream. I'm going to see this offered here. 15,500 is where I'll cut the position. I honestly would want to add to something like this if we end up breaking below this low. I mean, but this is strong. This is just looking like it might pop up now. You got quite an offer at 15.5. Give this a second more to see if we get slippery. Let's look at the SPY real quick. So coin the last few days. So yeah, this is can continue to push. Probably just cut this. I'll keep my 15.5 in validation because there's no sense in trading smaller size. There's no sense in yanking myself out of this. It's not a big deal. Coin is down for the day. Relative volume on coin and miners recently was quite nuts. Looks like the crypto related stocks have been doing better than actual cryptos. So let's just see if we get some kind of pushback by sellers. I mean, could very well be that all of this selling above this level right now is getting absorbed and we see this squeeze higher. How do I manage? So it's managing underwater position is one thing when you're trading full size. When you're trading a quarter of the size, half the size, I'm just gonna get rid of that. It's you know, I'm able to stay pretty calm if I'm underwater because I don't even have the full size position on that I would normally like to have on. So I mean 15.5. The S&P is where is the S&P at right now? As long as the S&P is above 45.10, that was just a premature short. Take a look at BTC in a second, but just want to keep an eye on this. I mean, that's kind of parabolic right there. You got a near vertical move. I don't want to be too contrarian, but I'm just been doing it long enough to be familiar with how moves like this end up almost completely retracing, especially on a day like today with, you know, a CPI print. Although you do have to be mindful that, oh, I just spilled orange juice on me, that there's a bunch of Fed speakers right now, so we don't have that up. So wait for a better setup to form. Whether that's some kind of failure above the range up here, some more clear sign of weakness, acceptance back into the opening range, I think ends up filling out this area, and then I think I think an area where you would look for a really obvious sign of demand and buyer aggression will be back down towards this gap. Let's take a look at BTC. So today is just back and forth chop. It's not chop, but expand this. I mean, you had the initial move off. So first and foremost, we have value migration higher over the last few days. I think 30,400 was the level is the level you want to see hold, because from the last, let's say, 3-4 days prior, that's where value had been established, and we were forming sort of a brief composite area of balance in a much larger range that we've been stuck within. So we were sort of at the low of that range. So the entire sort of multi-week value, you could see that this box right here this is the composite. It's actually supposed to be at that high, the initial high. This is the composite that we've been trading within. So it wasn't like there was any kind of, like I said, fat pitches, really great looking trades. But you're forming, an area of balance at the low of this structure, sort of trading between 30,000, 30,400, clear acceptance above 30,400 sets you up to revisit the value area high of the structure. Ended up revisiting that level. So I shared my short setup on Twitter the other day, right at this level. After we had that strong move through, you could see most of that move was on behalf of very aggressive longs. So a bunch of open interest built up, no real crazy spot demand behind the move. And by the way, to the left and the right, you have Binance Spot and you have Binance Perps. So it was just an obvious trap setup. You already covered one side of the range, or you covered the entire depth of the range rather. So it was a clear short setup once we started losing where most of that open interest came in. And if you look at Binance, if we actually open this day, well, I'll go to I have Coinalyze set up. So 1 second. I did touch on this during the other stream, but I just want to make it a little bit more clear while we're here and while we're kind of doing nothing. I mean, is this just going to fail right here, the NQ? It's tough to say. But going back to that spike up, here's the move right here. You could see it's just, you have crisscrossing moves. You have crisscrossing moves in terms of perp CVD and then spot CVD. And the spot CVD that I have here is just Coinbase CVD. I think Coinbase CVD makes more sense to pay attention to when we have someone, when we're in this sort of regime where we're looking towards a potential BlackRock ETF and possible sort of reinterest by United States institutions. I think Coinbase would be the sort of venue of choice for that demand to start finding itself back into the market. The question is whether or not, just keep a close eye on the NQ. It's moves like this. I don't want to chase anything, but it's days like this rather where the move that ends up coming after an event like a CPI driven or FOMC move, even though we're sort of well out of that window, we're into sort of the more honest period of the day in terms of price action. Even though we're here now, I think that it's tough to look away from an imbalanced move like this, because that the move that there's a really juicy short and that usually sets up from it, right? So you usually get just a really nice spill. So, I mean, I can't articulate it, I guess, any better. It's imbalanced. You're bringing in a lot of positioning right now, and the move that ends up unwinding happens pretty quickly. You just get paid fast. You want to be in trades that pay you fast, and it makes trades like this. It makes them really attractive, but it also makes them very tempting to try to sort of top tick. Anyway, opening range high, by the way, is right around that prior range that we just broke out of. So right around, it's a good amount of confluence between 15,475 and 15. What is that? 470. So that like 5-point window. Anyway, BTC. So perp CVD up, spot CVD down, and most of this positioning, about 10,000 BTC worth, came in between 30,800 and 31,000. So just a very crowded setup. So now we're back at that range high. I mean, honestly, price is still just in a range, so I wouldn't want to look at moves like this intraday, you know, even returning back to the range high, and think that necessarily this is the one to take us through. So meaning I wouldn't, in current conditions, I wouldn't want to prematurely buy, or you know, if you're not, and this is with respect to opening up trades outside of just having spot exposure. I feel like we're losing momentum up here in the NQ. So where BTC is right now, not really that interesting. Possible setups. Return back to 30,850. You have those singles up. No, you have that excess up there right now. So 30,850. One sec. Let me use this time frame chart. So that's where our daily excess is today. If we continue to show signs of absorption under here, or just a lack of momentum, and if we're looking at some kind of pullback in legacy after a really strong imbalance move, I would expect this to pull back as well. Again, it looks like more long positioning getting in behind this. You know, you're outside of yesterday's range. If we start trading back in yesterday's value, not yesterday's range, or within yesterday's range, but if we start trading back within yesterday's value area, so underneath, you know, we retested it already, but one sec, reset that, expand this. So if for any reason, if we start trading back below 30,000, we'll say 550 into this wick, I think just odds are, I mean, you almost covered yesterday's value area right there, but the point is, I think we just fill out lower again, unless there's a clear sign of acceptance through 31. I mean, so far, we'll get rid of this box and give you an idea. Well, we'll just put another one. So far, this is all taking place within a relatively imbalanced profile where we didn't have much filling out to begin with. So price is just in a range again, filling it out. I think I'm going to look for the NQ short again. Yeah. Back below 15.5. I think this thing is looking gassed. So, just looking at today's profile, really imbalanced. I mean, it tells a story pretty well. So, really imbalanced move off of CPI, established value between 15,396 to 15,444. Another imbalanced move, so sort of like a stop run, established brief period of value between 54.70, and now doing it again already. So we're kind of just, it looks like you're just running stops up here. Sell another contract. It looks like we're just pushing stops through that high, but I could see us filling out this region. So I'll leave that on. take some points. 16, 15. Come on, give me a drop. Leave that on. I want it to drop faster. Seller's coming in. It's holding again. Come on. Come on, drive lower. There we go. 31 points, 32 points. All right, I'm going to take that off for 30 points. So, I ended up, why did I take that off right there? I ended up taking it off because mindful that that 75, just to keep everyone sort of in the same boat, why that was just like a brief scalp. That 75-70 level, remember that is that's one of our gaps, and that is also the prior range high. So I just don't want to discount that 75 level bid showing up, just because the NQ's been trading one directionally all morning. You know, the idea that it's going to have a you know, some kind of liquidation structure off of an event like this, so CPI, and how we tend to pull back and cover those structures on the way back down. It's one thing to have that belief. It's another to think that, you know, you're going to get the exact top and that it can't continue to squeeze up before doing that. So I'm just mindful that this level might again be rebid, and we ended up taking 31 points off that either way. So I mean, you can see it's you have some of these bids already showing up. So 77, 75. So I'm not going to be buying this up here, even though it's the prior range high. Let's see. Apple's still off the highs. Microsoft's off the highs. See a little bit of rotation taking place in stocks right now. So just to clarify as to why this box is here, because it looks like it's just in the middle of nowhere. That's currently, so if we look at today's profile, and it's just, I'm marking it so I have an area of where that kickback occurred. One sec. That's our current excess for the day. So we have excess at the high. Again, sort of into an area where price had rolled over, so an area of supply. You know, this is sort of an exhaustive move. You could say there's a significant amount of sellers up here. There's a bunch of reasons why you could be left with a profile that's like this, with this kind of tail. This would be, if we were looking at significant supply, this would be a reasonable area to see that it gets cut off again. If you have excess like this and you start trading back within it and you see that, you know, there's no immediate rejection, a lot of times you're just going to end up filling that out. So a good example is actually today's profile in yesterday's excess. So here's yesterday's excess, and we get to spend a good amount of time in it, versus approaching sort of what you would want to look for is really the threshold or the beginning of it. So from the point where it just drops off to a row of a single column. What just happened? One sec. So now we have this slow sort of drift upward, and even though we're seeing value migration and you know, we had a bit at the lows, this kind of structure also sets up for a pretty easy roll down. It's not like I mean, this is good. We're building value. We're balanced, moving up. But there's really no get up and go through 31. It looks like we're still finding supply at that level. So I said earlier that one of the things that I do is if you're more comfortable, so again, sort of just focusing back on, just look at coin real quick. GMA. Keep an eye on coin. People got pissed off yesterday when I said coins move was a lot of it was due to a short squeeze. I mean, look at the short float. It was pretty significant. 25%, which means that 25% represents positioning and needs to be bought back also. So you have to think about it. Actually, there's more longs in the market that are still baked in that haven't been closed out, and haven't even been realized in the tape. So significant short, when you see a significant short float, whatever, I mean, get behind it, buy into it. But the idea that like institutions woke up yesterday and decided to send price 10 points is kind of silly. So I was saying earlier, what I try to do is, one of the things you could try to do is, this is probably a short from here, honestly. I don't want to hold through that level, but I think it's reasonable to expect that price comes back down to test these lower levels. Should I just put on one contract, two contracts for the sake of the stream? It's tough. I don't want to be coaxed into I mean, there's no get up and go from 75 so far. Sell two contracts. What was I saying? Trying to replicate sort of a time-based chart into a non-time-based chart. And if you look at this 3-minute chart, right? 3-minute chart looks sort of just like a 2500 volume chart. It's the closest thing to it. Or the 1-minute chart is probably, just because a lot of contracts have traded now, the 1-minute chart is probably closer to that. But the point is, on this screen over here, you can, never mind. You're looking at a Binance 115 million contract candle. So each one of these is closer to like what you would have if you used a 5-minute candlestick. So if you look at Binance, the sort of average 1-minute candle volume is, I think it's somewhere around 20 million contracts. And if you look at a 5-minute candle, I think it's around 100 to 120 million contracts. So the point is, you could sort of replicate a 5-minute chart with a non-time based chart, still get sort of the same look at price. So see if we could add to the spike up and look for, I think you get some kind of roll up here. So add. So we had that bounce at the level, so 75, but the reason why I'm just starting to build a position right up here is I think we're just showing signs of possible exhaustion. So underneath 15,550, see if we could add some contracts to that. You guys have any questions? This might be actually stronger than I anticipated. And you're getting a good amount offered above there. feel like I should probably just trade around this loss, bring it back down. So we're not at what I would consider just stop out quantity yet. No, I'll focus on crypto. All right, let's take a look at BTC again and just see where we are. So completely back within that move. Very impressive, honestly. We haven't really gone anywhere. Yeah, so I don't know. Does YouTube allow up to 1440? If it does, I mean, that'd be great. Let's just scratch out of this if we can. Not really liking it right now, but I think I'm torn between, because we're just trading. We're not trading full. It's tough to not let it ride a little bit while we're streaming, just to keep the trade on. Let me turn the background music off now. I'm getting a little tired of that. There we go. Questions. It does allow. Okay. Huh. Interesting. Yeah, I have to look into that, because I definitely want to have the highest definition that we possibly can. All right, I'm just going to scratch that for a few points. That was probably not the best idea to take that trade. I actually ended up adding into it. It's just not something you want to, habit you want to practice. Again, not trading full size, but if I'm going to be streaming and trying to give a good example, that would be sort of martingaling into, we're averaging down. In this case, averaging up into a short. Just not a good idea to even get into the habit of clicking and doing that. Either way, we just got out of the trade for 5 points. I know it's easy to rationalize because it's trading with less size than normal, but you'd be surprised how habits even like that will translate to when you're, if you just start practicing poor habits when you're trading a quarter the size, it doesn't matter. Once you start trading regular again, you very well could easily start doing the same dumb shit. And this is just, it's an iffy area. I'm waiting for ultimately, so we got the rebid at 75. That is the level where arguably if we start trading back within that prior range, and again, just to give you a bigger picture view about what that level is, it's that range high. So just got to be mindful. This could blow through a lot more. But my point is that back underneath that range high, so a move above range high, hopefully you guys can see it. There's a profile here built like that. So a move back below here, again, I just think we're looking at something that fills out this region. So it's tough to not want to be in that early. Again, when you've seen it happen so many times. But we are, so for example, when you're looking at a TPO chart, this region right here is an area where you have an established value, right? This is a very gappy move. A lot of times it's, just one-sided positioning, stop runs, et cetera, in either direction. And then when you start to trade through level and you start to build profile, that is somewhat equivalent to just establishing value in a new area. So this is an area we haven't been in a long time. This is arguably an area where if through 70 and 75, so that area that I marked off, if through here we establish value and we're not going to trade lower, then yeah, maybe we end up trading lower and covering this, but we might do it over the course of the next few sessions. So, you don't want to hold anything just because you think, yeah, we're coming back down here at some point. It's like, okay, well, it's the same concept of like gaps that people use in crypto when they're talking about CME gaps. It's like, yeah, they all kind of fill, but it's because they fill, over time, and price does this, has a tendency to do that, right? And trade back through prior untraded levels. And this could be over the course of, a month, right? So, I'd be more confident in holding something. It is just tougher to hold things when you're streaming, honestly, and talking at the same time. If we're trading back below that level. So two DOMs. So one of these is the spot market, and the other is the futures market. So you're looking at perps, USDT margin perps, and you're looking at spot. Just to get an idea through level, who's pushing and pulling. Some people use, and I have this set up for the streams. Usually, I'm not going to have like the Binance and the spot and the perp on this. Like if I wanted to look at a bunch of DOMs, I would use Okatoki. On EXO, sometimes I'll have like the ETH DOM and the BTC DOM, and there might be both futures in that case, because futures is where most of your movement's going to come from in the short term. See, now with price like this right now, this could very easily be just establishing a base here before another push up. So that's why it's risky to prematurely get in position. And like the NQ is something that always kind of just looks like it's about to roll over and then just pops up another 20 points and then does the same thing over and over again. Same as the ES. So we'll actually put this on ETH. Just keep an eye on ETH. Go through some charts. So Bitcoin's back in value. There's not a whole lot that's taking place. Last 30 minutes, not really much, but so here's what's interesting. You have a little bit of a different situation than these previous structures. So in this case, CVD down a lot. So CVD down. Okay, Coinbase CVD up. During that period of CVD down, open interest up, funding beginning to drift lower. This is probably the opposite case of what happened the other day, honestly. Maybe end up getting a squeeze further up. And we're approaching that single print region. If we start accepting within here, maybe we'll just end up putting on a BTC long. You know what? Let's just buy 100K BTC. So during the streams, we're just going to probably keep things pretty light. So here's 100K BTC. So right now you have, so we're at that level that I was just talking about, right? This level right here. We're pressing against it again. And you have sort of a prime example of absorption in this little flag upward. So if you're looking at sort of this move off of the low, look at the amount of volume that's trapped at the low. And specifically, this candle is a good example. It's sort of like a hammer right now. Sellers are hitting it, but price is now beginning to drift higher. So I think we get some kind of spike up. And honestly, what you would want to see is that at least off of this, some short liquidations start coming in. So that's that excess actually right up there. ETH is actually the one pushing into excess. BTC is above value. It's above yesterday's range. I think just odds are that this pushes into that level. If you start trading back in yesterday's range, if you start trading back into today's value, we'll just keep an eye on this. It's in profit already, but it's it's a stream position. It's 100,000 contracts. Ooh, that's a good amount of longs caught right there. So that's 16 million contracts right there. You want to see this continue to push. Otherwise, I don't know, the NQ starting to roll. It's not like the tape's really showing a ton of interest right now. Just in case, hold on one sec. I'm going to place my stop. So I always have one second. I just have a text message. You guys can feel free to ask questions too. Anyway, one sec. So just placing a stop off screen. Okay, so in this case, I'm just gonna leave this long on with a stop below today's POC. So stop is under 30,700. I mean, we're trading a fraction of position size. So again, open interest up into that low. You have a little bit of a squeeze that took place here. That's a good amount of volume, though. The NQ is back underneath that range high. So first level to test for the NQ, if we're going to spill from here, is probably right around 15,450. So wasn't paying attention to that to end up, we'll see if this ends up being a retest and then continuation lower. I mean, SPY's retesting VWAP. You have a little bit of a response. It looks like buyers are getting absorbed underneath this range, though, right now. I don't know, not the best retest. You want this to move pretty quickly. Same thing I said yesterday. So if you guys watched stream yesterday, two things that I said that I really wanted to wait for were the a setup above the opening range high, right? So, or taking the pre-market highs. Ended up taking a bunch of trades I shouldn't have taken. Again, trying to make sure we slow things down for the stream and don't force trades just because we're streaming. I'm going to take this. 2 contracts. See if we get a move that continues down to that pocket. Invalidation is back above 75. Cool. I'll take that. Just quick scalp. BTC. Not getting up and going, but sellers coming in and open interest going up right here. So be mindful of this possibly continuing to squeeze up. I mean, it's a reasonable position to hold for just a quick move. If we're rotating higher and we're seeing this value migration higher, you know, you want to see that the POCs are continuing up and we continue to hold where most of the volume came in today. And you know, we just look at, for example, if we just look at like VWAP. VWAP is right above 700. So we'll give this some room. If we get a bounce there, if the NQ gives us a little bit of a bounce, maybe we'll just add to that BTC position. And not really looking for much, just a very small move. Invalidation is close. Ideally, you want to see, again, that POC hold. And then we get a move that should take us through today's excess to retest 31. It's actually going to add a little bit to this. BTC pullback. As long as it's still kind of holding. Unless we get stopped out. So. One thing I'm doing during the stream is, you know, I'm never doing when I'm trading, is moving these things around so much. That's a pain in the butt. But, you know, I set like the Streamlabs up and I try to make sure that like you have a lot of screens on that you guys can see. But then, you know, some things have to be sacrificed. Like in this case, Sierra's kind of squashed a little bit right now. I had to completely cut up the sandwich platform. Sandwich platform is much larger than this. Like there's a lot more to it. You know, only showing a quarter of my dash trader. So I did have to move a couple things around just to accommodate it for the stream. Then that does become a little bit of a pain in the ass though, because everything is not in its exact correct place that I'm comfortable using. I said this yesterday, I'm probably not going to do this after Labor Day, after the summer. I think it's just a good opportunity to do this. Or I'll still do it, but I definitely won't do it Monday, Wednesday, and Friday. During the summer, it's easy to do this, you know, punt around a few contracts, talk about the market. There's not a whole lot going on anyway. It's not the most attractive time to trade. I certainly don't feel like I'm missing out on anything. Guys, feel free to ask questions, though, by all means. So now we're back sort of testing that POC. Sold. Stopped out of that position. Might have been too tight because you're seeing a little bit of volume come in now. And that's right at the VWAP. Not the best setup, but also not something I wouldn't mind for the sake of doing it during the stream, getting back into. One thing I'm missing right now by having this the way it is just looking at where all prices are with respect to each other. Let's take a look at that. It's the pinch that I always talk about that I want to look for. Market doesn't look like it's in a precarious. We know what happens. Got to drink more. Market doesn't look like it's in a precarious position. If anything, I think the worst thing that would happen in the near future is, unless absent any kind of major catalyst that send us lower, that we just chop. And it's not like there is a significant amount of open interest buildup. So the last that I left it, or last time I checked, just in total. Oh no, it's getting back up there now. I mean, nothing major, but if you look at price and how it's behaved within a range and how and open interest for those corresponding moves, it's been the case that the range the price is stuck in has been also the same sort of ranging behavior has been seen in OI. And you could assume that it's just like the positioning in the market has found sort of a relative ceiling. So relative amount of positioning that's able to get involved at one time, sort of a maximum and a minimum. So when things exhaust, when things get crowded, it's more or less been the case that that's been in a pretty confined area. So not for nothing, this right here is at sort of a range extreme in terms of open interest. So we're approaching it. The question is this now on behalf of overly aggressive shorts getting involved? And now, as a result, is the squeeze, instead of being long liquidations at range extreme like we've had, is this going to sort of precede a move up and a short liquidation instead? All right, so as I said, the level to focus on. So we have our blue box for a reason. This is the first area. Price bounced off. No response here. You're going to see price just continue back down to the prior areas of value. So this is kind of more or less a gap in today's profile, just from a volume standpoint. An area you would look to initially for demand after the break of that prior range. So you're getting it now. Not an area you want to blindly sell into, not an area you want to blindly buy the dip at, but just an area to look forward to. Underneath that, so under 440. So I'm just going to abbreviate prices a lot moving forward because it's easier than saying, 15,440 for the NASDAQ. Underneath 440, or just you want to say 40, then things probably move pretty quickly back down to that lower area of value, down to like 390. So keep an eye on that. And that probably is there's probably a little bit of a drag on BTC. Macro did become a little bit more relevant last week. There was a slippery move to the downside because of some jobs numbers, but this is a good macro print, right? So CPI being lower is good. But yeah, I mean, if the correlation is slightly picked up, that doesn't help us if it picked up and then the S&P pulls back intraday. I haven't really, I'm not actually sure if that is so obvious right now, so we should actually just take a look at it. So no, clearly price action is vastly different. So today's VWAP for the NAS is also right back down around this box region. So it's right above 400. So you got a bid at 440. So again, that level's not arbitrary. Guys, do you have any questions? So a little bit more ETH action than BTC action this morning. So we're back above. So I got stopped out, and now we're comfortably back above. So the question is, re-enter here. You got a good amount of volume trapped below that low. And look for that squeeze up. It's a tough call. I don't see a real reason to. I already have spot exposure, so if the case is just to take the trade for the stream, I'm not sure it's the most attractive setup to take. I mean, I think chances are that this continues to just, if we're going to press that 80 level, so excuse me, that 800 level, so again, where the today's excess is, if we're just going to press that, then yeah, I think you end up squirting back up to 31. So it's a quick move, though, right? It's not like it's the most attractive setup, but what happens to be the case is that in this example, that 31 level is also, that implies that we're above this multi-week value. So, you know, that's been an important level. So we've seen a good amount of supply there, seen a good amount of kickback by sellers. If we're going to be trading through that and accepting, then yeah, I think you're looking at another leg up. Now, mind you, the ETF decision, the first decision, isn't until August, so it makes sense that people are still going to be buying into this and actually even closer to it. So that's why, like, I think that things might not be easy in the near future. Maybe chop, uncertainty. You know, the big leg of the ETF move is behind us, but I think the chances are that into the actual decision, there's no real reason for price to like have any kind of really nasty pullback. Anything that we see is probably going to be short-lived. So, you know, an area that I was looking towards as a possible area of demand was underneath 29 into 28.5. And this is just from a dip buying standpoint. But, you know, this thing is going to remain bid, and it's going to have no trouble just hanging out up here. You know, into the ETF, it makes sense that as we get closer, actually, people try to like position for a positive outcome, which ends up probably being a sell the news outcome, right? Somewhere between, I think the ETF decision is somewhere between, you know, a positive decision and the listing of the actual ETF is a sell the news event. So, I mean, that's kind of wishy-washy, but, you know, the idea that price is up only from there, I think is very unlikely. It's more like that the ETF. So we might be on this kind of trajectory, you know, looking forward to the halving in the future, overall positive drift because we're a new asset class. You know, millennials are going to be creating the future. So crypto is, you know, going to be a major part of the future, whatever reason you want to have. This is our trajectory into that without an ETF. And it's sort of like with an ETF, our trajectory is steeper. And the idea is, you know, both paths involve BTC trading like this, right? Still, you have this kind of hyper volatile asset, but one of them involves a more, you know, traditional passive flow. It allows for institutions and pensions and sovereign wealth funds to get in with a little bit more. It makes BTC and crypto have a lot more credibility, and the comfort of getting involved at that point is completely assuaged, I think. And it just gets added to products and rebalanced. And then, you know, when you're an asset manager and you have something represent a small portion of any of the portfolios you build, it's almost never the case that those things then go to zero. So real quick, let's say that BTC gets added to, you know, the standard portfolios moving forward based, you know, whatever asset manager, BlackRock, Vanguard, whatever. Let's say it's like 1% or 2%, right? Being risky. It never goes to zero after that, really, for the most part. So, you know, it'll be rebalanced, but this is a completely different ballgame after an ETF is packaged. I mean, it depends on demand for the ETF, obviously, but I think it'll lend a lot more credibility to the space. Back above that level. Bid showing up in the NQ. See if we get behind this. See if we can get filled. My order is at 61. There we go. Let's see if we hold that gap. So 54. And we're only in 2 contracts right now, mind you. So I mean, reality is during these streams there's a lot more talking than there is trading, right? And when I'm not talking, I'm trying to compensate for it by trading a lot more, and it's probably not the best idea, but I think hopefully you guys take something from these streams. I mean, you want this to get up and go right now. It's almost like you don't want it to pull back to 54, even though I'm not in full position. Chances are you could pull back and just end up taking out this low again and continuing down. So just mindful of that, though. If you look at like the SPY, the ES, S&P, we're back above today's VWAP. We had a pretty nice splash below, but good amount of demand there. So buyers are getting aggressive off of this low. So you can see by those blueprints, but so if we tap and leave 54 again, then I'll add more. I don't know. Just going to bail out of that. And probably just bailed out at the exact low, but oh, we did get the 54 tap for some reason. I'm looking at it and I have the prices cut off, and that's all right. So if we end up trading back below here, I think we just end up pushing that lower area value. And maybe this does happen sooner than later. Some sells hitting the tape in the SPY. I don't know, guys. It's 11:15. Not the most. No, so I don't have a set amount of trades trading futures. If I'm not trading live, I don't trade nearly this much. By now, I mean, I might have taken a bunch of trades, but like the last streams are a better example because I was over trading during the stream or the last stream. But streams before that were fine. But there is this sort of feeling of, I feel sort of, I guess, more inspired to trade during the stream, even if it means it's poorly executed just because it's a trading stream. No, I don't have a set amount of trades. I do have a loss limit, but I've never hit my loss limit. I have a loss limit, and then I have a timeout quantity as well. So one of those, obviously the timeout quantity comes before the loss limit, but I'm done for 30 minutes after that point. And then I'm able to trade again. And you could have all these things automated, by the way. So you get a ledge at 70 right now. So chances are, yeah, so a structure like this, so this profile is building, but you have this ledge right here. Chances are we have a stop run above there, and then maybe you end up filling this out. But that long probably could have been a brief long scalp up to, let's say, 80. And then maybe then we roll a little bit more from there. The point is you do have a little bit of a ledge, so you get something like this, and then we start trading lower. Maybe the BTC stop out was good because it's not like it's getting anywhere right now. I want to, yeah, there we go. I want to have more of the price action on the chart while I'm streaming, but also have the tick setting. Just give you an idea of today's session. So what did I say, 80? See if we could run that 80 and then look for a pot. So there's your stop run. Push 80. Let's see if we could get that. So the idea is push 80 and then have some kind of reversal up there. I'm going to short this, actually. Start building a short. I think that we run that ledge. So we ran that ledge already. And then we fill out a little bit lower. If we're going to hang out above 80, though, then we'll just ditch this. So there we go. We're getting some movement down. So quick scalp. You want this to just roll now. SPY's pushing up, though. Might take my points and run. Yeah, SPY's continue to push. See if we could run 80 and then add more for that, what I think is a rotation lower. If we were just going to dump from there, then I probably would just be happy with that positioning. Probably going to end the stream in a couple minutes, though. So if you guys have any other questions, make sure that you ask them. It's not dying fast enough. Come on, give us a roll. Here we go. I want it to roll here. Either brief spike up and then we'll tag on the way back down, or we'll get stopped out. There we go. Too much time here. I'm just going to take my points. Too much time. All right. So, general outlook for the rest of the year. So there's a move right there. It is streaming and trading at the same time. I don't advise you to do it, but either way. So a lot of the times, especially if I'm trading and I'm looking at building a swing, or I have a decently a decent conviction behind a trade, I won't just sit and monitor it like I am right now because we're streaming. So you end up taking yourself out of position. So anyway, the ideas are still there though. We cleaned up that ledge. There was a ledge right here at what is that, 70. Ran it up. I said we were going to run it up to 80. It would make sense, just because that's where that next high volume node is. Ran it right under that, and now we're trading back underneath that level. I think that this is something that, again, like I said, just the idea is fills out lower, trades back in prior value, and the structure ends up being what most CPI structures end up being. General outlook for the rest of the year, I think summer is probably uneventful unless you have a headline from BlackRock and the ETF or the SEC decision, or maybe there's a decision with the Ripple case. But other than that, like, not expecting much. I think that 2024 is a much more clear year because we're at that point we're like right on the doorstep of the halving. I think it makes sense to get more active into the end of Q3 and Q4 this year. But what's your previous question? So, I mean, open interest is a combination of longs and shorts. What side is more dominant, aggressive longs or aggressive shorts? That's what we try to determine. So that's where you use order flow, and you'll use maybe CVD. Some people use funding, a combination of delta. You can get much more granular than that and study each individual exchange and each individual tape and how flow is impacting each exchange and where that positioning is isolated. But open interest is a combination of longs and shorts. It's just a matter of what side is more aggressive, right? Because if you have an aggressive long, it's into a passive seller. Most of the times, providers of liquidity are market makers, and they're going to be delta neutral. It's not going to be the same as someone getting into position with a directional view and using leverage and being a little bit more sensitive to adverse moves. So, I mean, it looks like, there's a good amount of open interest built up. It's the first time that we've seen it on a declining CVD locally. It's off of the back of positive news, good CPI, but yeah, the whiplash. So I think that it makes sense that people are maybe hedging again because there is this whiplash, and you're getting that towards the high of the range, and maybe we do get a squeeze upward because of that, right? Because people are hedging again just because of the uncertainty after today's move, right? But it's hard to tell exactly who. I'd say sometimes it's more obvious than others. If I was going to guess, I'd say if I was going to guess that a lot of this open interest is from shorts getting involved. But we'll see. Probably going to wrap it up, though. That was the short to take. So, damn it, guys. But so real quick, one thing that I'm going to be doing is, and this will mitigate for this issue. And not that I think there's an issue. I think these streams are doing exactly what I wanted them to do, or accomplishing it. I'm going to be trading and recording my content live. Not live, excuse me, but recording the content and then posting recorded content. And I'll have it so that it's edited and it's not, it's compact. But it'll just be me trading naturally. It won't be any kind of setup for the stream or anything you're seeing here. I'll be able to trade as I normally do with my setup the way it normally is. And then the editing will allow it to be that certain things can be looked at more specifically as they're happening. So that's a plan. I don't know exactly when that's going to happen. But yeah. All right, guys. Until next time. So Friday, I will see you at 10 a.m. sharp. And thanks for tuning in. We have 24 points during the stream, so that's not bad.